Let's take this straight across to Madan Sabnavis, Chief Economist, Bank of Baroda, who joins us on this special broadcast today. Thank you so much for taking the time out, sir. And let's begin with asking you the all-important question first. How much more do you expect the fuel prices to increase?
Yeah, actually, if you look at the way in which the crude oil price has increased since the last excise duty cut in November, we have seen it's gone up by around $30 to $40 per barrel. So something from 80 has now gone towards 110 to $120 per barrel. And intuitively, we can see that for every dollar increase in the price of crude oil, the actual cost as far as the refiners here are concerned increases for around 40 to 50 paise. Now, until the state elections were held, there was no increase in terms of the prices for the retail consumer, and therefore it was expected largely that after the elections end, they would start increasing the prices. So, and the higher cost has been absorbed by the oil marketing companies so far, and there's a limit to which they could actually absorb the losses. So therefore, the government has decided to turn on the tap and start increasing the prices for the consumer. So that's what we are witnessing right now. So we have seen around 5-6 increases. It's been done almost on a daily basis, maybe around 80-90 paise per day. And I won't be surprised if it increases by around 10 to 12 rupees before the government again reconsiders what should be the future course of action.
All right. The CPI was already at an 8-month high of 6.07% in February. Where do you see the prices reaching after the fuel price rise?
So I think the price could, for example, I'm here in Mumbai and we were earlier paying something like 110 rupees per litre of petrol. I could see it moving towards the 120, 125 mark. That is assuming that the international price of crude remains in this region of around 110 to $120 per barrel.
And do you see the crude price fluctuating internationally as well? What is your expectation going forward?
So in my opinion, the price will not go beyond 120, since it does look like that there could be some kind of a reconciliation taking place on the war front. Also, I think in terms of what the West can do in terms of sanctions is already known. There's no fresh action expected. So I would tend to believe that 100, 110 is where the price of crude oil could settle, maybe in the next couple of weeks.
You said the oil manufacturing companies are passing on the price increases to the end, absorbing rather the price increases as well and making it easier for the end consumer. Now, will all the other sectors or industries be able to pass on the rising cost to the consumer?
So if you're talking in terms of other prices, so if you're talking of things like metals, I think that's something which we've already seen prices being passed on to the companies. So that is something which will probably carry on, and we'll see almost all items which have been affected on account of this war in terms of global commodity prices moving up, also keep moving up. But in terms of pure, if you're looking in the energy products, I think there will be a tendency for even things like kerosene and LPG to go up, and unless the government is willing to subsidize to a larger extent, we could expect a final price the consumer pays to also increase.
With inflation crossing the comfort level, sir, set by the RBI itself, what is the interest rate scenario?
So in fact, the RBI has looked at an inflation rate of 4.5%. I'm quite sure there will be some revision when the policy is announced next week, when the NBC meets and the policy is announced. So one would tend to believe that the inflation will be probably in the region of around 5 to 6%. As we speak today, I think inflation is in the region of around 6%, just above the comfort level of the MPC, the band of 4 to 6% which they spoke of. So therefore, there is quite a bit of pressure on the MPC to really react and do something on interest rates. But in my view, the RBI may not change the repo rate right now. It will be more a case of looking at changing the stance of monetary policy from accommodative to neutral before it actually increases rates, maybe in the next policy. Because the view which has to be taken is that will inflation continue to keep increasing, or will there be a bit of moderation once the crude oil price settles at an equilibrium level?